All right. Hey guys, sorry for the delay. Don't worry, I'll make it up to you guys. We will extend it for a little bit, all right? Just a quick check. Can you guys hear me and see me clearly? If you can, if you can hear me and see me clearly, please type it in the chat box below. All right. Okay. Thank you. Okay, let me see. Right. Let me share my screen. Just drag this over here. Share my screen. Okay, can you guys see my screen? All right, just wanted to check in on you guys. How has the week been for you? I know it's a public holiday, right? So yeah, let's just go through this. Let's just go through today. All right, so yeah, can you guys see my screen just to make sure? At any point in time where you guys cannot see me, hear me, or see my screen, please just type it in the chat box below, right? Okay, so let's just start the webinar, all right? Okay, so today's webinar is on live trading session, and for me, I like to do live trading session because it allows me to help you guys see setups and also to go through what you guys might miss. All right. So before we begin the webinar, remember that everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. All right. So please do your own due diligence before you guys trade. Okay, so my name is Woon Hong and I'm an investment analyst previously at Rocket, and we have a special collaboration with IronFX to give you guys the best trading setups and educational webinars weekly. All right. So the agenda for today, we will go through key economic events for this week, which is CAD GDP, as well as USD Core PCE Price Index, USD unemployment claims. This one is extremely important, right? It will cause a lot of volatility in the markets later on. And also, we will go through DXY, gold, oil, and any FX pairs that you guys want me to go through with you. Usually, I will go through the majors and then I'll go through pairs that you guys want me to go through with you. So please don't be shy. Just feel free to send in any pairs that you guys want me to go through with you, and I'll go through a step-by-step process in a way that what I do on a daily basis. All right. So let's just go through together. Okay. Okay, so as you can see right here, we are on the forexfactory.com, right? This is where you can see all the different news. And usually for me, I like to filter out the red folded news, right? So I'll filter the red folded news, apply filter. Okay, so all these JPY news has already been completed, right? The next ones will be CAD GDP USD news. Okay, so for CAD GDP, basically, if you see right here, if you click on this detail box right here, right, we can see that in the month of September, right, we actually have an increase from the forecast. So if the actual result is increased, right, so CAD currency is strong, right? So for example, CAD JPY will increase, but USD CAD will decrease. All right, so later on, we'll take a look at the charts together and see how price will react for USD CAD. All right, then we also have USD news. Okay, so we will focus on the USD unemployment claims. All right, you can see right here for the um, previous week, right? The actual data is greater than forecast. Oh, sorry, actual data is lesser than forecast, which is good for the USD currency, because if the actual data is lesser than the forecast, means there are lesser unemployment claims, right? You can see right here, actual less than forecast is good for the currency. All right, so if DXY is good, means euro dollar, pound dollar, right, and gold will usually, most of the time, increase. All right, so let's just go through the charts together and see how this works. All right, let me see. XAU USD. Yes, of course, we will go through XAU USD. All right, so let me just go to the charts itself. Give me a second. Let me check it out. Okay, this is the chart that I use. IronFX. Okay, 1 second. Okay, so let's just go through this together. All right, let me just clear this. Okay, so let's go through DXY first. All right, before we look at any pairs. Okay, so this usually what I would like to do is I use the 200 EMA, right, to see the trend on the H4, right? And right now we are obviously in a uptrend for EMA, right? And DXY, which is the US dollar index. Okay, so from here, right, we will look at how we can plot out for DXY. All right, so what I would like to do is usually I'll mark out the first every pair where we are going through, right? Let me see. The first step is to always, oh, let me see, mark out your first and first and second support slash resistance. So second thing is to mark out any Vivo levels. Fine. Okay. Okay, so these are just my usual step-by-step basis, very simple stuff. All right, so usually I will mark out my first and second support and resistance levels. After that, I will mark out any relevant Fibo levels. And also, let me see. Please can you repeat that again? If actual is greater than, sorry. Okay, so just to go back again, right? We have a question, which is, if actual is greater than forecast. All right, so let's say for USD news, right? USD unemployment claims, if the actual data right here is lesser than the forecasted data, is good for the USD currency, right? You can refer, usually I would like to refer to this, right? This is the usual effect, right? Actual less than forecast is good for currency, all right? Let me just type it, actual less than, refer to usual effect for actual and forecasted data. Okay, so from here, this is what I mean, right? If this is for unemployment claims only, all right? So if the actual is greater than the forecasted data, right, then it is not good for the USD currency. All right, you can always refer to this usual effect right here, right? Then, for example, if let's say USD, always remember if USD currency is good, right? Let me just type it here as well. If DXY is good, XXX USD will usually go down. All right. This is fundamental stuff that you would have to know. All right. If DXY is good, any pairs that ends with USD will usually go down. Right. This is more in layman's terms. So euro dollar, pound dollar, Aussie dollar, right, will go down. Inversely, USD will go up. Okay, so yeah, this is something I just put a smiley face there so you guys can take a snapshot of this, right? So this is good. Usually for myself, I usually refer to DXY for euro dollar as well as pound dollar and gold, right? These are the only few pairs that I trade, right? I only look at euro dollar, GBP, USD, and gold. Most of the time right now, I only look at these two, right? Later on, I'll explain why. Okay, so yeah, let me just leave this here. Okay, so the third step will be to find fair value gaps if there are, because you know that usually price will react to fair value gaps or will be tend to be drawn to fair value gaps, right? And next, lastly, always follow the trend, right? You don't want to go against the trend and try to use multi-time frame analysis. What I mean is to look at H4 and then H1 and your entries will be 15 minutes or 5 minutes. All right, to put it simply, for myself, I usually use H4 and M15 or M5. Okay, so let's take a look at DXY. All right, so DXY, first let's mark out the most recent, yeah. Okay, how to find FVG? Very, very simple. Later on, I'll show you guys. All right, so right now, at this area, we can see there is a strong level of support right here. Okay, because price has tapped this multiple times for DXY. Okay, so every time price comes to this level, right, if we expect DXY to bounce up, means XXX USD will go down. Okay, so if price failed to close at this support level, right, means these pairs will usually bounce up. Okay, so let's just take a quick reference. All right, you can see price is starting to go up right now. So this is correct. So next level is usually I'll mark it up here, right? Some people will mark out your resistance level as maybe here, right? But for me, I usually mark out the extremes right here. You can also mark this out as your first resistance level. You're not wrong, right? First resistance, and this can be your second resistance. All right, then your support, I'll say right here. Oh, sorry, this is the support. Okay, very, very simple stuff. So this you can refer. So what I usually do is layout setup. I put it like this, right? So if I put it like this, this pair will be euro dollar, and this one will be the XY. Oh, why is it? Wait, let me see. A not sure why this isn't working, but it's okay. We can just refer to it like this. Okay, so usually what I like to do is I'll refer to DXY and then I'll go to these pairs. Okay, clear the chart, mark it out again. It's a very repeatable process. All right, so your resistance level is right here. And then your support level is right here. Right, as you improve day by day, right, you'll be able to mark out these levels pretty easily. Okay, so this is your second support. And this is my second resistance. Let me see. No. This is, how many pips is this? Let me see. 54 is fine, but it's a bit too far. Let's just mark this out as our second resistance. Okay. So right here, okay, EMA, we are still bearish, okay, but we can see price has already rejected this area once. Okay, we have a reaction here, we have a reaction here, and price is now trying to go up to this level right here. There is a possibility, right, for euro dollar that price might break out of here and come up to this second resistance level, or price will just come down here. Okay, so what you have to look at is, let's go to H1 time frame. All right, we can see that price is now pretty weak, right? We have the candles are not bullish engulfing candles, right? These are bullish engulfing candles. If you see such strong candles, right, just follow the trend, right? But for now, we can see that this level could be a potential level for price to react here. Okay, so if you go back to H4 time frame, let's see if daily we can find any. This is not a very, this is not a very clear extension level, right? So let's see. Extension. Yeah, it's not a very clear extension level, so let's not use it. All right, so let me see. This is a pretty risky sell. I would rather buy if price comes to this area, right? So let's see. Let's mark it out. It should be around 61, yeah, 61.8%. Okay, so once price comes to this level, I would tend to usually buy it, right? But for now, I will try to leave euro dollar unless it breaks out of this area, right? Ideally, if price breaks out of this area, right, what you can do is you can put your long position. Oh, this is, oh. Right, but you see, the risk to reward ratio is only 1:1, right? I don't really like this, okay? Unless, right, price does something like this, whereby we have a break, right? Comes down here, okay? Then we will enter on the break of this structure. Stops placed below here. Your target is right here. Slightly better risk to reward ratio, but it's still not as good. All right, usually what I would like to do is if I can enter right here, I would rather take a long position over here, stops placed below, always place below your fib level, right? Or the most recent low. All right. Do not place it right here at the wick. You see this wick over here? Don't place it at the wick. Place it slightly below, right? It's only about 14 pips, right? Your target is essentially back to this level right here or this level. Okay, so for euro dollar, I would rather wait for price to come down, which is about 40 pips. All right, it might come down later on, right? So let's see how price will react. All right, so this is for euro dollar. Okay, so let's see. Yep, so the data might actually be better than the forecasted data. So there's a possibility that DXY might be good and this might just go down. All right, so this is what we are looking at. Okay. So this is essentially what I am aiming for, right? For price to come down here. Okay, so let's move on to GBP USD. All right, so for fair value gaps, right? Right now we don't have any. So what is fair value gaps, right? Some people, oh wait, let me see. Right, so let's see, this is the okay, fair value gaps. Okay, so right here, if you see that this candle, right, has no wick, right, usually price would tend to fill this gap. Okay, so yeah, if let's say price comes down here, right, we want to enter the buys. Okay, so sometimes this is something that we call FVG. Okay, if you can do your own research on FVG because it's a huge topic, right? There's not enough time for me to go through the whole system with you guys, right? But FVG is very, very useful. But you cannot rely on FVG itself, right? It can be a direction, right? To know where price would tend to come towards to fill up this gap, right? The main purpose is to fill up this gap and to have a reaction of it. Okay, so right now, we can't see any FVGs right here. Maybe on H1, right? We have a FVG over here. Then we can see price reacted very nicely over here at the FVG, right? So basically, FVG, oh, let me just mark this as a blue box. Okay, so FVG is basically the first candle, the top wick of the first candle, and then the bottom wick of the third candle, and then you draw a FVG. Okay, then price will come down, fill this gap, all right, either tap it or fill this whole gap, all right, before having a reaction. Okay, sometimes I would like to spot the FVGs on the H4 for my entries as well. But right now, we can't see any FVG here, right? We can only see that there is a bullish engulfing candle along with our support level, as well as 61.8% FIBO level. So if price comes down here, most of the time, we are aiming for buys upwards. Okay, very, very simple stuff. Okay, so let's move on to GBP USD. Okay, so for GBP USD, it's kind of messy right now, right? But right off the bat, we can see that this is a support level. Okay, this is a resistance level. Okay, then we look for second resistance level right here. Okay, this is our second resistance level, and this is our second support level. Okay, usually I would like to expand to see whether on the left side we have any potential areas to drag, right? But for now, we'll just depend on this. Okay, so right now I can see that GBP USD is trading within this range, right? Most of the time, if you see that price is within this range, it is preparing for the upcoming news later on, right? Upcoming volatile news. So we can expect for GBP USD to either have a bounce upwards from here, all right? But right now, we can see even on the H1, right? We can't really find any potential setups unless you want to trade this level right here. Right? What we can see is we have a 61.8% feed level, plus we have our FVG here. Okay, so later on we'll check on it and see, because we're on the H1, right? Maybe during closer to the end of the session, we will check and see how this works. All right. But market structure wise, if you look at H1, right, we failed to take out this high, which means that there is a possibility for price to come down lower to this level. Okay, so don't enter any trades at this area yet. Let's just watch the reaction. All right, because based on market structure, most of the time, price would tend to come down lower before going up. All right, this is just very, very simple market structure. Okay, so if we go to H4, we can't really see any reaction, right? H4, we don't have a fair value gap. Only on H1, we have a fair value gap here. All right, along with our 61.8% feeble retracement. All right, so let's see how this works out. You see, right here, if you enter here, you will already be drawn out, right? Because we are not following market structure. So that's why I say to look at price, market structure first before we do anything else. Okay, so for GU, right now, I can't see any setups, right? Let's see. Yeah, maybe at this level, we can consider to look for buys, but anywhere here, right, is in the, if technically speaking, is in the middle of nowhere, you're only entering based off the FEG and FIB level, right? But you're not following the market trend properly. All right, so right here, let's see H4 if we can see anything better. Yeah, daily, we are still, daily has already flipped bearish, right? So we are still bearish right now. We shouldn't take any buys unless price shows us that we can take buys around this area. But for now, we are not taking any positions, right, for GBP USD. Okay, let's take a look at gold. Okay, so for gold, if you realize, right, if you go to H4, right, gold tend to react to FVGs on the H4 time frame, right? If you look at market structure properly, right, we are right now bullish. So this is a level, right? Remember, FVG wise, we have a level right here. Plus, we have a support level over here. Okay, and if you want to draw your FIB, right? Let's see if we are able to draw a FIB. at the 50% feeble retracement level right here. Right? Some people will say, why don't you draw your fib over here? Right? Okay, because if you draw your fib over here, we have all these thing, we have price cutting through these levels, and we don't want that to happen, right? So we will draw right here where price came up and came down, right? This was the reaction upwards. Okay, so this is your swing low right here. If you want to double confirm, right, I would recommend to use something called fractals, right? These are your swing highs and swing lows. Okay, if I were to use this filter, let me see. Okay, so you can see if you use the fractals, right? Swing high, swing low, swing high, right? All these arrows, the red arrows are the swing highs and swing lows. So what I will do is, this is my swing low. Okay, this is just a reference, just to practice how you can identify swing highs and swing lows. All right, so if you draw this, if you mark it out, right, we have a FVG, we have a resistance that became a support, right? Plus we have 50% feeble retracement level over here. All right, so let's see how many pips is this. Oh, this is about 200 pips. So it might take a while for price to come down here, but since we have USD unemployment claims news later on, right, price might drop, okay, to this level, right? And then we can take buys. All right, this is what I am looking at potentially. Okay, at this level over here for price to react, maybe come down here, right? Before we continue upwards again. Okay, anywhere here we don't want to sell, right? There is a possibility that you might see price come down, but if let's say you are tempted to sell, right? The only sell levels that I can look at right now, right, is if price breaks this low. Support dotted, okay. Okay, if price breaks this low, right, we can expect for price to come down here. If you can catch this, it's about 100 pips, right? But the problem is, where should you put your TP and SL, right? Let's say you are entering a sell right here. We must put it around this level right here, right? A swing high level. So then our target will be right here. So at least you can get a 1:1.5, or best case scenario, 1:2 right here into this FVG. Okay, so if price breaks this low, right, we want price to do this. Okay, breaks this low, right, we want it to retest. Okay, and then you enter right here. Very simple stuff, right? You enter right here, your stop's placed above this high, your TP right here. Okay, this is for gold. All right, you can also look for entries on the 15-minute, right? But you see right here, price hasn't broken this low. Okay, so what if you really want to trade, right? A scalping technique for gold is that once I know that we are in a bearish market structure, lower low, lower high, lower low, lower high, lower low, what is next, right? Lower high. Okay, so I will mark out from here to here, and then remember, I won't use any of these levels right here. What I'll use is, this is something that I learned from a person right here. I'll use the 0.71. 71%. Okay, so I will tend to enter on the 71% fib level. All right, then if you ask me, right, I will enter the shorts here, stop loss, place above this high, right? My TP, this low. Okay, this is for scalping, right? For 50 minutes. Let me just take out this. Don't want to confuse you guys, right? But let me just take this out for a bit, right? Focus on this 71%. Okay, right? Some people will say, oh, why do you use 71? Why do you not use 61.8 or 78.6, right? For myself, there is no magic number for FIBO, right? If you see that every time, let's say price reacts to 61.8, 78.6, right? But for me, right, most of the time, I tend to be more comfortable using 71% because this is where I realize that when I'm on pairs like GBP USD, for even pairs like Euro JPY or exotic pairs like AUD, CHF, these kind of pairs, right? The 71%, either on 15-minute or H4 works the best for me after I identify the market structure. Okay, so this is how I feel more comfortable trading, right? For myself, usually I would tend to advise people to find what works best for you. Don't copy people unless you know, like they are really, really successful and stuff like that. Then you can learn a thing or two, right? But based on your own lifestyle, based on your own risk appetite, right? I would say either you can be a swing trader, you can be a scalper, right? You can see what works best for you and see how this trade consistently, and you will see improvements, right? So for myself, I would say possible that you can take this 71% level and look for sales. Okay, then your stop loss, right? Place it slightly above, maybe 25 pip stop loss, right? Your TP is around this level, which is about 1:2 risk to reward ratio. All right, that's if price actually comes up to this level. All right, so this is for gold. Okay, so yeah, Blaze, right? Blaze. Yeah, this is for gold. Okay, so let's see how this actually works out for gold, right? We might see some reaction from this 71% level because we are looking at this bearish movement over here. So we want to carry on this bearish movement downwards to this FEG. All right, so usually you can use FVG as a way to look at how price might move. Okay, so for myself, usually I target 1:2, right? But if you can hold all the way to this level here, right? Good for you. All right. But for myself, usually I will do a 1:2 or 1:3 risk to reward ratio max. Right? It's already good enough. Okay, so let's see how this plays out for gold. All right, so let's move on to, oh yes, USD CAD. I remember because we have a news coming up soon. So let's go through USD CAD. Okay, so let's start off with H4. Oh, USD CAD is on the rise. Let me see. Wow. Okay. Resistance. Okay. For USD CAD, right? Let me see the news. USD CAD GDP did well. Most probably it will do well. Let's see. Yep, let's see. Forecast is 0%. Okay, means there is a possibility that price might fall from here later on. Let's see how this level is important. Cost. Yeah, because we have this high, we also have this high, and we have this high. All right, and this is on the daily chart, by the way. So, okay, so since we are on the daily chart, let's go to H1. Okay, this range is quite big, right? So I would say, let's see. This should have been a bearish. We can see right here, this is what we call change of character right here. Okay, but you can see price has already started to retrace upwards. Okay, if price breaks this level, we can expect it to continue upwards, right? So this is a level whereby if price breaks this area, we can expect it to continue upwards. Okay, but let's hope for the best. Let's see whether price would react to this level right here. $71, yeah. Let's see. Let's see how this. I know this bearish engulfing candle is at the 78.6, right? If I were to put it right here, it's about 78.6. Okay, but for me, remember, I will tend to just use the 71%. Okay, and see how price would continue downwards. So let's see if I were to enter a short right here. Oh, this is such a small SL. Yeah, we can definitely take this trade. Okay, this is a risky trade, by the way, because we don't really have a confirmation, right? Usually, if price comes here, lower low, lower high, right, I'll expect it to make a lower low, right? But most of the time, oh, let me just on the lights for a bit. Yeah, just in case it's a little bit too dark. Okay, usually for myself, right, I would like to have at least once, then right here. Then this is where I will enter, right? Usually once it happens, we have a change of character right here, then confirmation of a break of structure, then we enter, right? But right here, we can take a risky sell position, okay, around here because we have a very tight stop loss of less than 20 pips. All right, it's about 15 pips stop loss. So we can potentially enter for UCAT. Okay, so just this is risky because price can definitely break this high and go even higher. But if it reacts to here, right, we can see price might come here and take down these lows over here. Okay, so because we are on the H1 time frame, so yeah, this is rather we have news in, let me see. In about 2 hours time. Okay, in about 2 hours time. That's why we can see right here, UCAT is moving quite slowly before news, right? And we are not in session right now. So once we are not in session, right, I wouldn't enter any trade at all. Okay, So yeah. Oh yes, by the way, guys, just to let you guys know, you can also use baby pips, right? Let me type in the chat box. Use baby pips for sessions. Try to practice trading during session timings only. Okay, use babypips.com for sessions and try to practice trading during session timings only. All right. For example, for myself, I only trade during London and New York, but I tend to avoid London because there's a lot of manipulation, right? So I would tend to trade only NY session are usually better than London sessions. Personal preference. Okay, this is just a personal preference, all right? So yeah, just to take note of that. Okay, so this is for UCAT. All right. So you can try out this 71% FIBO level, right? But of course, you have to remember the market structure. Okay. So yeah, you can see right here, if I were to show you a quick setup, right? We know that right here, higher high, higher low, higher high, right? Then you see right here, higher low, higher high, higher low, higher high. Okay, so very clear market structure. So once, let's say we are in this zone right here, right? Then we can draw a fib level. Okay, let me just clear everything, right? Higher high, higher low, higher high, like this, right? So we're expecting higher low and higher high. Okay, if we are expecting that, since we have so many times that higher high, higher low, higher high, so you are confident, right? That is when you draw your fib, right? You can see right here, sometimes it taps, sometimes it doesn't, right? So this is an example of it not being tapped. Oh, yeah. So once you miss this setup, just move on and go to the next. All right, so this sell is rather risky. The sells over here. All right, because we don't really have a clear downward movement yet. We are only basing it off on this level where we don't want it to break this high. Okay, so this is a risky sell in my opinion. All right, you can definitely wait for price to do something like this, make a higher high, higher low, wait, make a higher high. Okay, then you can mark out your fib right here, something like this. Then once price comes down, right? Price comes down, you enter on this area at the 71%. Okay, you can do this too, right? I feel that this is way safer rather than those sells. Okay, so depending on your risk, right? I would say this buys is it might work pretty well, right? Rather than sells, right? But if you really want to take a risky sell, right? This area, 71%, you can try it out. Okay, but overall, I would say this is a much safer trade than the sells. Okay, and just to advise you guys, please only trade during only trade after news. Okay, try not to trade during news sessions because I realized that for let's say you're starting out trading, be it you just started out, be you are a amateur, right? You traded for at least 6 months already, right? But don't let news events shatter that confidence that you have, right? Because let's say you are very confident about a trade, but you go and trade during news session and then it goes against you, right? It will totally shatter your psychology And trading is all about psychology, right? So yeah, don't let it affect your psychology. All right, try to trade maybe 15 or 30 minutes after the new sessions, right? To still be able to catch that volume, right? But not that extreme moves. Okay. Okay, so maybe we have about 10 minutes more. All right. Please let me know if you guys have any pairs that you want me to go through with you. Right. We'll extend for maybe like 10 minutes more because I started the webinar late. Don't worry. Okay, so anybody want me to go through any pairs, feel free to let me know. All right. BTC. Oh, BTC. USD JPY. Oh, sure. Okay. I don't know if you guys have seen, let me see, who is this? Cleon Chong. Oh, okay. So Cleon, I'm not sure if you guys have seen, have chance upon like, just a curious question, have chance upon like maybe those people on TikTok doing BTC analysis or crypto analysis, and they are like Taiwanese people and stuff like that. I don't know if you guys have gone through such experiences, right? They will say a lot of some, I would say, insightful stuff, but quite misleading stuff, and they will trade maybe very very big lot sizes. Okay, so just a tip: don't follow those so-called gurus, right? They will mislead you and give you like false hope. Okay, so let's go through BTC. Wow, BTC is already at 72,000. Wow, that is bad. Okay. Wow, this was such a good sell opportunity for BTC. Right, a lot of people say that SNR don't work, but it works. Right, so let's mark out first resistance, second resistance. I would say just mark out the first resistance because it's relevant enough. All right, if I were to go to the second resistance, it might be quite far. Oh, we don't even have a second resistance. This is beautiful. Okay, BTC might actually reach all-time highs. This was already a reaction, not a all-time high, but a reaction to the all-time high. All right, so let's see H4. We are definitely in a range right now. If you realize, right, BTC like to do something like this, right? If we look at H1, you can see if you are a breakout trader, right? You can see right here, BTC, once BTC is in the range, right? Once it breaks out, it won't come back to this range, right? That's what I realized. Okay, so let's see. We are in a range right here, right? It broke out and just went all the way up to the all-time highs. Okay, so this area, I would say you can see right here again, right? We have a consolidation right here. Okay, usually I wouldn't do this, but for BTC wise, BTC like to follow patterns. Okay, so what I would say is, if I were to refine my level, right? Right here. Once BTC, this is just, I don't really trade BTC, but once, let me see, where is my trend line? Yeah, right here. Okay, so once BTC, we have a descending trend line. So once BTC breaks out of this, right, what you are looking for is to buy, right? Very, very simple stuff. But of course, you need to wait for it to come back down, go up here. Okay, and this is your longs. Okay, something like this, right? This is what ideally what we are looking for. Okay, for BTC, right here, it should be in a range. You can enter after the breakout of this trend line, or you can enter right here, right? Your stop space below this week. Okay, then your take profit will be right here, 1:2. Okay, this is what ideally what I'm looking at. But let's see, like Cleon, right? Cleon, I think it might actually do this trend line breakout, because I realized that BTC, if I were to show you other examples, right, they like to do a lot of breakouts. Like let's say this range, right? If we have this, wait, no, this is a bad example. Um, let's see. Okay, let's see. Since we are like right here, you see, right here, price reacted so many times, right? 1, 2, 3, right? And then once it breaks out of here, right? The important thing is for it to close below. We need a candle closure below this trend line. Plus, we need this retest. You see, once it has both together, then it comes down, right? But of course, I don't really like this. I don't really like BTC's risk to reward ratio. Like let's say if I were to enter a short position right here, right? My stop loss, some people will put it here, but if a fake out could easily take you out, right? Some people will put it here, right? This is much safer. And then your target will be this level right here. Okay, so usually you can trade BTC on the H1. You don't have to go to H4, right? So yeah, I would suggest right here, let's see 15 minutes. Yep. We need a proper breakout of this level. Some people will draw it like this, right? This is your first support. This is your second support. Okay, so BTC, most of the time, it likes to break out, right? So it might just trade around here. Right now, this timing for BTC is not very volatile. You would probably wait um, about 3 hours from now, 3 hours, 3 hours, 30 minutes, right? Then we can see some breakouts. Okay, so I hope I answered your question. Okay, so let's move on to USD JPY. Crescent, all right, let's go. Last one for USD JPY. Okay, H4, we might, H1, I would love to take a sell right here. Very, very simple stuff. You see right here for USD JPY, I like USD JPY and go for FVGs, right? Because you can see right here, we have a FVG. Price actually tapped this FVG and go down, right? So usually once price has tapped this FVG, I won't use it anymore. That is just my my personal rule. All right, so for USD JPY, right, we might be bearish on the H1 time frame. Let's see. Yeah, M15, we are already bearish. H1, let's see, H4. Wow, USD JPY has been bullish for so long. Okay, H1. You see these areas right here hasn't been taken out, and price has made, we are having a very nice movement downwards. So let's make use of that. Okay, so I would say right here, right, some people will enter This is our resistance level. This is our second resistance level, right? This is our support level. Okay, and this is our second support level. Right, usually I like to mark out these areas. So right here, let's see, 71. This is definitely at the 50% range. Yeah. We can see, we might be able to see a lot of sellers right here because all the usually people will tend to sell at this resistance level. This is what we call SBR, right? A support area that has become a resistance. All right, so once here, we might be able to see some sellers, right? So, but if you compare from here, short position, right? Your stop loss has to be right here, which is crazy, right? And your TP is here, which is not very ideal, right? So what I would say is instead of all of this, right, just focus on entering this level right here. You highlight this box, okay? The last upward move before this strong push downwards, right? Okay, then I'm sure it lines up with 71. Yeah, exactly on the dot. See right here, 71%. Okay, so I would most likely I would prefer to enter right here. Okay, short position, better R anyways, right? 1:2. From a 1:1, it became a 1:2. All right, so this is for USD JPY. But of course, I think most probably price might not even reach here, right? Because you can see we have a very strong push downwards. Price might actually break all these lows. Okay, but let's see how all of these setups play out. I already have all these setups in place. And yeah. Okay, that is all from me, right? Oh, okay. All right. So thank you guys for tuning in to today's live trading session. Thank you for being patient and sorry for the short delay. All right. I hope I was able to make it up for you guys. Right. Yeah. I usually love to do such live trading webinars because I'm able to share with you guys more, right? Not just sharing setups and stuff like that and don't explain anything, right? But give you tips as well to improve along the way. All right, so thank you guys. Thank you, Cleon. I respect that. All right, thank you. Thank you everyone for tuning in to today's webinar. I hope you guys have learned some. All right, no worries. Thank you guys for tuning in to today's webinar. I really, really appreciate it. And I hope I'll be able to do more live trading webinars for you guys. All right. Appreciate it and thank you. Sorry for the late. Sorry for coming in late. Right. I really appreciate the comments as well. Right. Thank you guys. I'll see you guys next time. All right. Take care, trade safe, and stay safe. All right. Bye bye.